We've seen a significant breakthrough, really month by month. Many of the vaccines, certainly the Pfizer vaccine, if you haven't had a booster, month by month those antibodies drop, and we're seeing more breakthrough, probably for a variety of reasons, and probably there are other variants that are, piercing the vaccine. But at-home tests are great, and if, again, pending their accuracy, but if they're as accurate as some of the initial ones are, that can be very helpful. You can self-isolate. You can inform your doctor sooner. You can get a confirmatory nasal swab. You could get monoclonal antibodies. Hopefully you'll start on, the Merck drug when it's approved. As an antiviral. So there are really a lot of benefits for this, and I think it's great. And hopefully we'll get other at-home tests, whether it's influenza or RSV or other things where you don't overload the healthcare system.
Yeah, I know a lot of startups that are certainly working on this and using this as an opportunity to develop at-home testing for other ailments. Hey, Dr. Lustbader, I'm wondering if there is any concern about data here, because if people are testing positive for COVID at home, they're not necessarily being entered in a public database that keeps track of where hotspots could be.
Okay, guys, let's play stop and profit for British pound. 135.76.5. This is the price we have to put. If share price will change, if the price will change its direction, and if it will move lower, we secured, and we will sell at this level. Okay, guys, so please play stop and profit at 135.76.5, 2 pips above our entry price. Stay safe.
Healthcare record. We can talk about it on another show, but you're right. That would be a problem with the test. But I think that rapid in-home test, the advantages far outweigh any of the disadvantages.
Hey, one thing I want to ask you, I'm getting ready to do some traveling for the first time, and I'm thinking about when I got my vaccines. I've been thinking about this a lot, Ian, and it was like kind of end of April. So here I'm getting ready to travel 6 months, 7 months later. Do I need to be concerned because I'm not part of the group?
Wait, we're traveling together. Do I need to be concerned being around you?
Well, yeah, exactly. You don't have a booster either. Do I need to be worried about traveling around you? So I need some guidance.
You've got a few options. You could certainly check your antibody levels, the spike antibody. Again, we don't want everyone doing that because that is a strain on the system.
Yeah.
But people who are 6 months out, and you are 6 months out or longer, do lose antibodies. We do see people who've had 2 shots who don't have detectable antibodies, and certainly those people should get a booster, either the same. The party line is if you've had 2 Pfizer, take Pfizer. Moderna, we're waiting for the third approval for that. So I think it's very reasonable. If you've had 2 Pfizer shots, either take the third if you're going to travel or check your antibodies. Unfortunately, we don't have data how well people do after the third because, again, that's 3 shots of the alpha variant, and we're seeing delta and beta and gamma and mu and other variants that can make you sick. But the thinking is that you will be less sick with certainly the 2 or 3 shots.
That's good to know. Useful advice. News we can use.
I hope that was helpful for you.
Yes, no, absolutely. Always good stuff that we get from you and thoughtful stuff. And I know we never have enough time, but always look forward to the next time with Dr. Ian Lustbader. He's clinical professor of medicine, NYU Langone Medical Center, on the phone in New York City. I do think about this 4th wave, and I do think about not having the booster and getting ready to travel.
Yeah, if you have a terminal, check out Bloomberg Intelligence. Sam Fazeli has a really interesting piece about the 4th wave likely to be driven by immune escape variants. Scary.
Immune escape.
Yeah, I don't like the sound of that.
So that means so much for the vaccines, right?
Yes
in those
and no.
cases.
I mean, we don't know about the data when it comes to Merck yet.
Yeah.
And about the approval process, but I think that's Dr. Lustbader joined us on Friday, joined us just now. It's a real opportunity. I mean, it's a real idea of turning the corner.
And we do have a lot more tools than we used to. All right, folks, just getting started on this Wednesday. We have stocks now at their highs of the day, just a little bit higher on each of those major equity averages, but way off their lows of the earlier session. Coming up, we are going to talk about the news in Washington. That certainly has changed the tone on Wall Street. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. We got to talk DC.
Yeah, we're going to be talking in just a few minutes with Nancy Cook, White House reporter at Bloomberg News. Does this just kick the can down the road? Is this a repeat of what happened? Is there a preview of what's to come in just about 6 weeks, Carol?
Yeah, exactly. That's a good point. All right, we'll get to that in just a moment. Right now, let's turn things over to Charlie Pellet. Check on that trading day. What a reversal, Charlie.
Indeed, we've got green on the screen, and let me characterize that reversal, Carol Massar. At one point, we had the Dow down 459. That was a drop of 1.3%. Right now, the Dow is up 25, a gain there of 0.1%. S&P at the worst level, down 55, down 1.3% as well. Right now, S&P pushing higher by 8, a gain there of 0.2%. NASDAQ up 55, higher by 0.4%. 10-year yield right now, 1.52%. Investors keeping a close eye on developments out of Washington. As we have been reporting, Senate GOP leader Mitch McConnell offering Democrats an agreement on raising the debt ceiling through November, alleviating the immediate risk of a default. The proposal would push back the partisan confrontation over the debt ceiling, but not resolve it. Again, 10-year yield 1.52%. Spot gold up 0.1%, 17.62 the ounce. Bitcoin rallying 6.7%. 54,938 right now on Bitcoin. West Texas Intermediate crude down 1.8%, 77.50 the barrel. But the big story, natural gas plunging 10.1% today. Dramatic reversal as well at 5.67 per million BTUs. The Biden administration has announced $1 billion purchase of rapid at-home COVID-19 tests, an additional investment geared at expanding the availability of such products in coming months. Globally, cases of top 235 million, deaths now exceeding 4.82 million. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, and she blames social media for the delay in taming COVID.
Social has spread misinformation, right? People don't know who to believe, what to believe, where to go for good information. There is a crisis of misinformation that leads to people making poor decisions. And poor decisions drive infection.
Dr. Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we follow on a regular basis. Pfizer shares, they're down 0.9%. Its German partner BioNTech down 4.9%. Those are the ADRs. ADRs of AstraZeneca down 0.3. Moderna out of Cambridge, lower now by 6.1%. Johnson & Johnson down 0.3. Recapping, stocks higher. S&P up 7, up 0.2. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, maybe we take some Bitcoin, get a few Bitcoin together and deal with this situation in D.C.?
Indeed. I'm looking. There you go.
Saying.
Hey, El Salvador, look at Bitcoin right now, 54,952.
What about the platinum coin?
Oh, there's the platinum coin, too.
Hashtag mint the coin.
Exactly.
I see that.
There's something in there. All right. Well, as you know, Charlie, thank you. Senate Majority Leader, Senate Majority Leader Chuck Schumer. Let's try this again. Senate Majority Leader Chuck Schumer, we know, was looking to hold this vote, right, to take up this measure. We do know the White House at the same time is looking to maybe broker a deal to scale back the president's ambitious economic agenda. And then we know we've heard from Mitch McConnell also that it looks like maybe we can move forward here.
Busy times in Washington, D.C.
Sorry, I have to keep everybody straight here.
Yeah, it's not an easy thing to do. But
Executive,
fortunately,
legislative
we have
branches.
Nancy Cook join us, and she helps us do that very frequently. She's White House reporter for Bloomberg News. She joins us on the phone from Washington, D.C. Nancy, I honestly don't even know where to start. I feel like we should start with this McConnell news because it is so big, but there's so much more happening in Washington all at the same time.
Right. Well, there's sort of like a series of a combination of like crises and things that President Biden wants done. And so the most immediate crisis is really raising the debt ceiling. Treasury Secretary Janet Yellen had said that the government was going to run out of money on October 18th. The White House has really ramped up its efforts in the last few days to try to talk about how if the government defaulted, it would hurt veterans and seniors and all these government services. So they've really ramped up the pressure. Senate Minority Leader Mitch McConnell just came out a little while ago saying that he would be open to a temporary raising of the debt ceiling for about a month or so. And so we're still learning exactly what that would look like and if Democrats would go for it, even if his own party, even if other Republicans would go for it. So I would say that is a developing situation. But if Mitch McConnell went along with it, that would be a huge sense of relief for the White House because, they were, I think, getting worried about how they were going to do this.
All right. So this is where we lean on folks like you, Nancy, and other members of our DC team in terms of what's going on behind closed doors. If for this to come out about McConnell, does that kind of tie into the president possibly scaling back the size of his economic agenda? Like, what are the things that are going on right now behind closed doors?
So it doesn't actually, I would say, like, they are connected in that raising the debt ceiling may end up being something that is part of the larger Democratic bill, which we're calling, this economic agenda of the president. But really, in order for the president to get that economic agenda through, which seems tough at this point, he has to get all the members of his party to sign on, both on the price tag, both on what the programs look like. And that's really something that has bedeviled the White House in the last few weeks. They're trying to deal with progressives being mad, moderates, centrists, the House is mad at the Senate. All Democrats are mad at each other. And so that's sort of a Democrat on Democrat problem, whereas the debt ceiling is something that the Biden White House is still trying to work with Republicans to raise.
So on the Democrat versus Democrat, who budges first? Do the progressives in the party budge, or does Senator Manchin, Senator Sinema, the moderates, do they budge?
Well, so far we've seen the progressives budging because the progressives have budged, but they've also had a win. They've had a win in that the president basically said that they would not be able to pass the infrastructure package, which is a bipartisan package, without passing this other big sweeping social spending package. And so that is a win for the progressives. But at the same time, in order for that big package to pass, progressives are going to have to compromise, and really the price tag of that package is going to be much smaller. And so far they are going along with that. Senator Manchin has said that he won't support anything above $1.5 trillion. Originally, President Biden wanted it to be $3.5 trillion. And so that is something that they are trying. The White House is now trying to broker a compromise between all these different parties on both the size of the package and what's actually in it.
Hey, just quickly, just got about 20 seconds here. But if they get something done on the debt ceiling, can we assume then, and as you said, a lot of it's what's going on in the Democratic Party, that we'll get something done on infrastructure too? Just quickly.
I think that if they can pass the reconciliation bill, the big one, yes, they'll be able to pass the infrastructure bill. That has a lot of support.
You've made sense. Thank you so much. We really appreciate it. Nancy Cook, she's White House reporter at Bloomberg News, on the phone from Washington, D.C. I mean, the worst thing is, and we've heard it from Rick Davis, who has joined us, he understands, he says he's taken a lot of phone calls of, everybody in D.C., that the longer you sit on something, the longer it is to ultimately get it done.
Yeah, a really good point. Hey, let's stay in Washington, D.C. for a check of the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. Senate GOP leader Mitch McConnell is apparently ready to offer Democrats an agreement on raising the U.S. debt ceiling through November, and that would alleviate the immediate risk of a default. The proposal would push back the partisan confrontation over the debt ceiling, but it would not resolve it. McConnell is expected to meet with Senate Majority Leader Chuck Schumer this afternoon to discuss it. Well, the shift from McConnell came after President Biden met with business leaders at the White House today and warned them that the failure to extend the government's borrowing authority could set off a global financial crisis. Citibank CEO Jane Fraser agrees.
America simply cannot default on the debt because the U.S. Treasury market is the bedrock of our financial system domestically and globally. And defaulting is going to cause lasting damage.
Fraser says lawmakers are playing with fire. The U.S. Department of Education says major changes to a student loan forgiveness program could lighten the debt load for many. Through the program, the government would forgive remaining student loan debt for qualifying public sector workers after they've made monthly payments for 10 years. Officials have also announced a waiver for loans and payment plans that did not qualify before. The search for an 18-year-old student who fled after a high school shooting today in Arlington, Texas, has been taken into custody. The student has been taken into custody. Law enforcement authorities say he ran away after opening fire inside a Dallas area high school during a fight, injuring 4 people. 3 of the victims have been hospitalized. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Gosh, the ups and downs when it comes to big finance. And this story by Tom Maloney and Heather Perlberg, it's on the Bloomberg, has to do with Josh Harris. He's the billionaire co-founder of Apollo Global Management, and it has to do with his rapidly shrinking ties to the company after losing a power struggle to run it. And we know this all had to do after we saw Leon Black, right, being removed. He created this company, and then because of his ties to Jeffrey Epstein, was pulled away. And then there was really kind of a who was going to lead the company.
And Josh Harris ended up not winning that battle.
Right.
As a result, he's offloaded almost 6.6 million shares in the New York-based private equity behemoth since announcing in May that he was relinquishing day-to-day responsibilities. This year, he's liquidated almost 18% of his holdings for at least $490 million. That's according to data compiled by Bloomberg, far more than in prior years and well in excess of sales by co-founders Mark Rowan and Leon Black.
He had signaled last year, he's 56, by the way, so if you want to just get an idea, he signaled last year that he intended to sell a chunk of his stake for estate planning, but that was before an outside review found that Black paid sex offender Jeffrey Epstein $158 million from 2012 to 2017 for tax and estate services. Harris then privately urged Black to give up control of the firm to avoid damaging its reputation, which further alienated, apparently, Harris from Apollo's upper ranks.
Black stepped aside for Rowan to become chief executive officer, and Harris was sidelined.
Right. Rowan is Mark Rowan, who's one of the co-founders with Leon Black of Apollo. So Harris, a little perspective, he still is Apollo's second largest shareholder, continues to be, quote, a strong and supportive long-term shareholder of the company, according to a statement from his spokesman. But this is one thing we like to track, insider buying and selling, meaning insiders who are connected to a company, work at a company, and whether they are buying or selling shares of the entity that they're connected with.
Yeah, one more number here. Almost all of Harris's 38.6 million Apollo shares are in Apollo operating group units, partnership units that have to be converted to common stock before they're actually sold.
All right, interesting story, and I highly recommend you can read the whole story. You can find it at Bloomberg.com.
and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now on the S&P 500 index, up 12 at 43.57, higher by 0.3%. At one point, the S&P had been down 1.3%, but right now we're looking at green. The Dow up 53, higher by 0.1. The Dow Jones Industrial Average have been down 459 points. NASDAQ up 62, higher by 0.4, 10-year yield 1.52%. A surge in Bitcoin up 6.4%, very close to 54,787 right now on Bitcoin. Natural gas is plunging today, down 9.7%. Right now, natural gas, $5.69 per million BTUs. Sticking with energy, West Texas Intermediate crude down 2.1%, $77.25 a barrel. Gold up 0.2%, $17.63. Stocks whipsawed in heavy trading as Republicans are poised to offer Democrats a way to end the debt ceiling impasse. Stay with Bloomberg Radio for the very latest. Again, recapping, S&P up 10, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. Well, buy land, grow cannabis, welcome in tourists, and then repeat.
Sounds like easier said than done, right?
Exactly. We're talking about pot tourism, and there have been big dreams of it up in Canada, but Tim, it's being dashed by some pretty tough rules.
Right. It's not as simple as being able to do that. For example, you can't even have windows that aren't blacked out because they don't want minors to see the weed that's in there.
Some really tough rules. All right, so let's find out exactly what's going on. This story in the upcoming issue of Bloomberg Business Week on newsstands tomorrow, online and on the Bloomberg News Toronto Bureau Chief Danielle Bocove joining us on the phone in Toronto. Hey, Danielle, good to have you here on Business Week. So tell us what's going on.
Well, I mean, it's a bit of a mess. Put your finer point on it. If you want to sell pot from your farm, so let's backtrack a little bit. I went out to do this story in the first place because I was pitched by a PR firm that represents some Ontario growers, and they had written to me about these kind of dreams that some of the producers in Canada, where pot is now legal, had in terms of ways to actually sell cannabis from their farms. And I thought this was really intriguing because the idea is kind of lovely, right? They're talking about sort of leveraging things like wine tourism, maybe even poaching some of those tourists. And you get this sort of idea that what you're going to see is people traveling along these sort of quiet country roads from vineyard to apple orchard to pot farm, sampling Ontario's bounty. And it just turns out that that's not what is happening.
Why is that exactly, though? I mean, you paint a really nice picture of what you could actually do there. I mean, it's exactly like being at a winery, right?
Sounds kind of heavenly.
Room, but it does. But in some instances, Danielle, you write that the people who work at these facilities can't even sample their own product.
Yeah, there are so many rules in terms of what they're not allowed to do and the way they have to do things. So, I mean, let's start with what they are allowed to do, which is if they get the correct licenses and amendments to their licenses, and it is a very long and bureaucratic process, then they are legally allowed to sell some weed on site. In a very convoluted way. So technically what they actually have to do is they have to route some of their product through the Ontario Cannabis Store, which is the government-regulated buyer, so that the government still gets its cut. But they can do it without it actually leaving the property. So that's great. It means that they don't have all the shipping costs and all of that. But they can't take people on tours of the fields because they're worried about contamination. They can't offer sampling. They can't serve food. They can't serve wine. If they do open a gift shop, you mentioned the windows have to be blacked out because they can't risk there being a minor in the parking lot who sees inside. So you're not kind of talking about, a roadside stand selling eggs. You're not going to see patios with tables and umbrellas set up. it's there's not much left when you tick all those boxes.
How about we all just smoke a little bit and let's figure out these rules and make it all why can't we all just be happy? I'm just saying.
Don't need to smoke,
That's true. That's right. That's true. So Joel Weber, editor of Bloomberg Business Week.
So I still can't get over when we just have amazing photos of a lot of ganja in the magazine. It's just oh wow, look, it's a lot of marijuana.
Is that a recent shift, Joel?
You can't overdo it. It is very easy to do too much marijuana coverage.
Oh.
and you thought I was going somewhere else.
We didn't know what you were
right?
talking about.
But I think that's a good segue here because if there is going to be a tourism boom, Danielle, what do we think it might look like? What are going to be? Where is there a hope?
I have a hard time believing it's going to happen if the regulations don't change. And that is kind of, I think, what was kind of at the heart of the story, right? It's you have these people, I said there are puns everywhere, but you have these people with these high hopes, and then you're faced with the reality, right? They have this kind of evangelical almost excitement about their product and the potential and the medicinal aspects of it, and then you pull up in front of their operation, and the first thing you see is the security. There are high fences. There's barbed wire. It's not the
antithesis.
I would want to have my vacation, but
So, all right, because we know investors have been hot and heavy for this world, and we've seen kind of booms and busts with it, I feel like. Danielle, what's the outlook here? Will things change? I don't know. What are you hearing in terms of how it ultimately plays out longer term here?
I think there's still a tremendous market for cannabis, obviously. And when I was speaking to Brendan Dittmar, who's the master grower there, the stuff he's doing, that he's experimenting with, even not being able to sample as he grows, which is yet another one of the restrictions, you're not allowed to taste, because there's this regulation where they need to account for every leaf in the supply chain. So he says that all of his crossbreeding and testing has to basically be done by sight and smell. But he's experimenting with these terpenes, which are the flavonoids in the cannabis that smell like pineapple, and they have all of these different flavors like cheese and Mountain Dew and things like that are supposed to be very good for you, they say, as well as delicious. And he's also doing a lot of experimentation with THC, which is obviously the component of cannabis that gets you high. And that's really the reality is where the market is. Certainly in Canada right now, the demand is for ever higher levels of THC, and there is a lot of money that can be made doing that. And so I think that what is going to happen is that for those growers who are willing to go through all of the steps and invest a huge amount of money on just the hope of getting a license, because it all has to be done up front. If they manage to get their license, they'll be selling to Ontario regulated stores, and they'll be making their money that way. The farm gate side, it sounded like a nice kind of peripheral revenue stream. I really have trouble imagining that it's going to take off.
And I wonder, also at some point if the U.S. though and how things shake out here. Man, there's so many puns that are flying around here.
I know you're holding back,
right? You try to not.
You try not to, and they just happen. They happen organically. You just can't make it up. But it does make you wonder if there could be a little bit of rivalry between the U.S. and Canada in terms of what's allowed at farms.
And Danielle, just go back 20 seconds, just quickly.
Yeah, maybe it's possible, and I mean, my guess would be that if we ever get to that point, that the regulation would be more permissive on the U.S. side of the border. Just speaking from my puritanical Canadian roots, but who knows, right? If there's money to be made, maybe we'll soften our stance a little bit. Right now, it's pretty tough.
What?
I said I have the giggles.
Oh, you do have the giggles. All right, Joel Weber and Danny Bokov, Toronto Bureau Chief.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, October 6th. The Dow just turning negative, lower now by 15 points, down by less than 0.1%. Has been a volatile session. The S&P 500 erasing losses after logging a fourth day of 1% moves. For right now, the S&P little changed, up by just 1 point, up less than 0.1%. NASDAQ holding on to a 28-point gain, up now by 0.2%. Stocks whipsawed in heavy trading as Republicans are poised to offer Democrats a way to end the debt limit impasse. 10-year yield 1.52%. Spot gold up 0.2%, $17.63 the ounce. West Texas Intermediate crude down 2%, $77.37 a barrel. Natural gas plunging 9.2%, $5.73 per million BTUs, while Bitcoin is surging 6%. 54,584 right now on Bitcoin. Lots of concern about rising energy prices in recent sessions and what perhaps that could mean for inflation. Global gas and coal markets have tightened just as the heating season starts in the northern hemisphere, with limited supply failing to catch up with recovering demand. Seema Shah is chief strategist at Principal Global Investments.
There are many parts of the inflation pressures at the moment which are transitory. The energy price crisis, though, is probably something a little bit deeper, and there are structural issues which are starting to come out. And without any solution in the immediate future, I think this could be a more persistent problem.
American Airlines Group says it will continue to operate cargo-only flights that are presumed during the height of the coronavirus pandemic, quote, as long as the economics make sense. American Airlines Group shares down now by 4%. FedEx CEO Don Colleran says cargo volume at FedEx's airline operation has accelerated during the pandemic to where the company had projected it would be 4 years from now. FedEx shares down 0.2%. And that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, underway this week is the Bloomberg Invest Global event, talking about all kinds of global investments, asset classes, the top voices in so many different investment fields. Tim actually caught up with our Gina Martin-Adams to really talk about the market outlook, right?
Yeah, we had a great
earnings.
chat this morning. You can check it out on the T-Live blog, too, where we're covering everything in real time.
Yeah, and also our Bloomberg editor-at-large, Eric Schatzker, had a couple of really smart conversations, including one with Don Fitzpatrick over at Soros. So let's bring in Eric. He's here in our Interactive Brokers studio. She's a big deal.
Dawn Fitzpatrick is a big deal because she runs money for George Soros. Talk about a tough job, right?
Yeah.
You're working as an investor for one of the greatest investors of all time. No question about that. Never mind all of the other stuff that gets people excited about George Soros and divides them on the subject of George Soros. In any case, she is an extraordinarily impressive individual. She's one of the few people in that kind of a role, few women, in that kind of a role, running multiple billions of dollars. In fact, they've got about $30 billion under management. And you can imagine sort of the light and the heat on her, not just because of the work she does for George. In any case, it's a rare opportunity to talk to Dawn Fitzpatrick because she doesn't do very much in public. And there's a lot to ask her about. Of course, we talked about inflation and the potential for stagflation, the S word of the moment. We also talked about China, and she has a dim view of China. I want you to listen to an excerpt of this interview, and I'll expand on it after you've heard the soundbite. What she's talking about is the sea change underway in China. President Xi has decided that the breakneck growth that these tech companies, Weibo, for example, or Alibaba, have had has to come to an end, that doesn't want the enormous wealth inequality that's developed in China, and that every company, as Don put it, every company in China now is a state-run enterprise. That's how it's going to function, and that has enormous implications for investors. You've just heard what she thinks investors need to be wary about when it comes to Chinese stocks traded in the U.S., and she's not alone, right? John Pollock, the co-CEO of Elliott Management,
right,
said the same thing effectively, but she thinks that this is no time to be putting money into China, and Soros is backing away.
Also making news, Eric, at least in my universe, was her comments about cryptocurrency. Bring us up to speed on what she said, because this got a lot
I'll
of
tell you
echo.
why this got so much attention, because when I interviewed Dawn for the first time back in March, she hinted that Soros might have some crypto investments. She didn't say it outright, and shame on me, I didn't. As a matter of fact, maybe not shame on me. I think, in fact, I did ask her, and she said, I'm not going to answer that question. But this time around, she did. I pointed out that, we were talking about inflation, and she was talking about where you could go and position yourself. Maybe, as she is, you take a short position on treasuries and other government bonds around the world. And I said, well, what about Bitcoin at $50,000? And she said, yes, as a matter of fact, we own some coins. Didn't say how many, but that was the first acknowledgement that they are, in fact, invested in crypto. She subsequently went on to say that they think that the use cases for blockchain, such as decentralized finance, DeFi, are way more interesting, and that gives you a little bit more insight into where they might be invested. They're probably, I'm saying this as a bit of a guess, but probably invested in some of the startups that are working on some of those decentralized finance solutions.
But it just also shows another step or embrace, if you will, by institutional investors. Increasingly, we're seeing that, right? It's coming out.
100%. 100%.
I feel like that was one of the
Not all, but many of the large, more innovative, sort of swing for the fences type of investors, Paul Tudor Jones is another,
right,
are invested in crypto.
Do you get the sense, though, Eric, that these institutional investors they don't want to miss out on something? Or is it they fundamentally believe in what the value proposition?
I don't know that they've crossed the I believe Rubicon, but they see that there's something that isn't just hype here. They don't know how it's going to end up. They're not putting a lot of chips on that square. But they are saying we need to have an allocation to Bitcoin or to crypto, more broadly speaking, whether it's 1% or 5% of the portfolio. We need to dip our toe into that pool, because if 50,000 goes to 500,000, you can't afford to miss it.
Yeah,
exactly. Hey, just want to mention a headline. It really speaks to something you talked about in your conversation with Don Fitzpatrick of Soros. President Joe Biden plans to meet virtually with Chinese President Xi before the end of the year. This is according to a senior U.S. official, with tensions, as we know, escalating between the world's two largest economies. Timely conversation as we see increasingly this decoupling between U.S. and China. One last thing, I sent you a message. Perfection, your conversation with Ken Griffin of Citadel at the Economic Club of Chicago. Just got about 45, 50 seconds. You guys talked about so much. Is there anything that he said, you prepped so well for your interviews, is there something that he said that you were like, oh, I wasn't expecting that?
Well, for example, on the subject of China, why would Ken Griffin, guy who runs a hedge fund, guy who runs a market-making business, have a firm view on China? As it turns out, he's very deeply involved in the conversations that business people are having with the Biden administration. There was that call a couple of weeks ago. He was on it. He advised the Trump administration on China. He thinks the United States is making an enormous mistake decoupling from China. He says, have no doubt about it. The Chinese are absolutely determined to match the United States technologically in every possible capability. And if they aren't buying it from us, they're going to develop it themselves. And their approach to competition, right? Their ambition, their desire, their hunger, in his mind is so much greater than ours, and that's why he thinks this needs to be a wake-up call, and Americans need to start thinking again about the kind of competitiveness that drove this country's economy out of the Second World War.
And China knows something about long-term planning. Just going to put that out there. Eric Schatzker, just a bit. Editor-at-large at Bloomberg News. Go to Bloomberg.com. Check out all of those smart interviews that Eric's been having at Bloomberg Invest and elsewhere.
Let's get a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Well, you just read the red sticky headline there. President Biden plans to meet virtually with Chinese President Xi Jinping before the end of the year. We're getting that from a senior U.S. official. Plans for the meeting were announced in a conference call with reporters following about 6 hours of meetings today between White House National Security Advisor Jake Sullivan and a senior Chinese foreign policy advisor. Well, there could be a break in the stalemate over raising the debt ceiling. Bloomberg's White House reporter Nancy Cook says it looks like it might just be a short-term fix.
Senate Minority Leader Mitch McConnell just came out a little while ago saying that he would be open to a temporary raising of the debt ceiling for about a month or so. And so we're still learning exactly what that would look like and if Democrats would go for it, even if his own party, even if other Republicans would go for it. So I would say that is a developing situation.
Again, Bloomberg's White House reporter Nancy Cook. Well, we've seen a spike in evictions now that a federal moratorium has ended, but the Biden administration is rolling out a new plan to protect some tenants.
Long-delayed evictions are rolling out more than a month after the end of a federal moratorium that had protected tenants, even those who hadn't paid rent for many months because of the pandemic. The Biden administration is stepping in for residents of public housing. A new rule from the Department of Housing and Urban Development protects tenants in HUD-subsidized public housing and says they cannot be evicted for non-payment without providing them 30 days notice and information about federal emergency rental assistance. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, so we're sitting in the newsroom today, and bam, we have red headlines across the Bloomberg terminal. Usually get most of our attention. You know, if we're on air, we often bring them to our audience on YouTube, our listeners here at Bloomberg Radio. Certainly the folks on TV do the same thing. And this one made us all, who were not on air yet, talk about it in the newsroom. And it has to do with Cathie Wood and ARK Investment Management. The firm that she runs is joining the financial industry shift south to Florida.
And in response, or as a result, ARK is closing down its New York City offices permanently at the end of this month and relocating to St. Petersburg. This according to a statement the company put out on Wednesday. We should note it's not the biggest firm around, but it is certainly very prominent, especially after the just record 2020 that it had. It has about 36 employees, and it said it's going to build an innovation center to retain and attract top talent in the Tampa Bay region.
And we know as soon as a couple people messaged me, because I've talked with and we've talked to Cathie Wood a lot on air, and we have here on Bloomberg Radio been talking to her since she really started her fund 7 or 8 years ago. I have to make sure I got my math right.
Yeah, you've been talking to her for years.
Since the beginning.
Yeah.
Our producer Paul Brennan and I, we have a great relationship with her, and her team has been terrific. And I remember when she was starting out, and she just had a little bit of money, and now she's got billions that she's managing. But the backdrop too, to some, and people were messaging me, and we were talking, is it about lower taxes? Because we can increasingly are seeing Florida's lower taxes being very popular with the finance industry, particularly after COVID really was so tough on New York. Many of the moves that we've seen so far tend to be satellite or second offices with relatively few headquarters, but this is really Cathie Wood and ARK leaning in big time into Florida.
Yeah, and she's also known, and you know this better than I do, Carol, about the way that she hires analysts. And she often hires really young analysts at the early part of their careers, people with different backgrounds than a traditional analyst that you'd see at a firm like hers.
Right, and if they have a company, she has explained this to me, that if they have a company like Tesla, it's car, it's tech, it's a lot of moving parts, and they look at it very holistically rather than there's just one analyst in kind of a vertical that covers it. Anyway, we are seeing increasingly finance go south. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are rebounding on a possible debt limit extension. Let's head right over to the first word breaking news desk for today's afternoon call. Lots going on. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. It was a choppy session today with the markets really under pressure until that McConnell debt limit offer. Dow's now higher by 25 points, was down 460. S&Ps are higher by 7. NASDAQ rises by 38. The U.S. 10-year yield at 1.52%. Gold is up 3. Transports gained 58 points. And Bitcoin jumps 6%. Among the main 11 S&P sectors, utilities and staples led. Energy was under pressure, and leaders to the upside in the Dow, Microsoft, Salesforce, and Visa, while Dow Inc. fell 3.5% and led to the downside. After earnings, Constellation Brands was little changed. And in other news, activist Jana called for Macy's to spin off its e-commerce unit, and Affirm Holdings jumped 21% on a report of a Target partnership. Wrapping things up, Electronic Arts sank 7% intraday after users noted bugs with the beta version of its new Battlefield game. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And here live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
So the Bloomberg Big Take today, it's about the leftist leader on the rise in Chile and how that is rattling international corporations and investment firms. So, Tim, let's get that story.
Let's get that story directly from Eduardo Thompson, the Santiago bureau chief. He's with us on the phone from Santiago, Chile. Eduardo, great to have you on the show. So tell us about the leftist leader who's rising in Chile right now.
Hi, thanks for having me. The profile is about Gabriel Boric. He's a former student leader, 35 years old. He's a deputy in the lower house in Chile, and he is currently leading the polls for the presidential elections this November. He comes from left-wing party, the coalition here in Chile called the Broad Front, the Frente Amplio. And he won a primary earlier in July against another left-wing candidate from the Communist Party. They're still in an alliance there. And he comes with a program that has a lot of people in the business community and quite nervous. His program includes raising taxes by about 8 percentage points of GDP within 2 periods. He's counting at least, he'll be like for 4 years, and there maybe somebody from his coalition can follow from him to increase the tax revenue to levels closer to other countries in the OECD. He also wants to increase taxes on mining activity, on the rich people in Chile, and he wants to reform the pension fund system, which is one of the most contentious issues here in Chile. The pension fund system here is privately run. It's composed by individual saving accounts that every individual has to put money every month, obligatory. And the thing is, many people have found out that when they retire, they receive very low pensions, and there's been a call to reform the system. The problem is that at the same time, the pension funds are the biggest institutional investors in Chile, so that has market players very nervous if the system will exist in the future, or will it be replaced by a state-run system. Boric is somebody who sort of embodies the rage, the discontent from lower and middle-income segments in Chile that basically didn't benefit from the strong growth and during the last decades after the the end of the Pinochet dictatorship in Chile. Chile was one of the fastest growing countries in Latin America. It has a very open economy, very open to trade. It exports, it's the main copper exporter in the world. It also produces a lot of lithium. But there's a big segment of the population that feels that they didn't get their part of the riches. And that sort of explains the unrest that Chile went through beginning in October 2019. And that led to Boric rising in the polls and now as a front runner for the presidential elections.
Well, you know, this is today's big take. It's one story from around the world from Bloomberg News that you really have to read. And one thing that really jumps out to me is the picture of him and what he looks like. Because if you were to describe what a politician or a front-running candidate looks like, I mean, this guy's shirt's untucked. He's got tattoos on both arms. He's not wearing a suit, and he's so young.
Yes. And it's part of his image. He's always been like this. I remember that the first time he showed up with other younger members at the lower house, other members were very, there was quite a controversy because he wasn't wearing a tie. And since then, he's never worn a tie at the lower house. It's their image. It's their way to represent that they're changed. He actually has cleaned up a little bit, if you could say. He's combing his hair now and keeping his beard a little bit shorter. When it actually showed up in local news at the first presidential debate that what happened to him? He looked much tidier. He wasn't wearing a tie still, but he cleaned up his appearance a little bit. But yes, he's very young. He is a former, he studied law. He didn't graduate. He didn't pass the bar, the equivalent of passing the bar here in Chile, because he's been always involved in politics. But he's sort of an intellectual. We interviewed him via Zoom. We could see his room full of old, worn-out books. He quoted Gramsci, philosophers. He spoke about liberal policies in the UK in the 1920s.
Right.
He's a very well-read and cultured person.
Hey, just really quickly, Eduardo, he talks about needing a new model of development for the country, you know, and this whole idea of not being just limited to the wealthy. Is there a new model that will also be much more beneficial, or time will tell? And just quickly, about 20 seconds.
Well, it's in 20 seconds. You can think of Boric and his economic program as something that is very much inspired by social democracy in the left.
Okay.
He wants to make a difference with other left-wing leaders in Latin America. His inspiration is Mariana Mazzucato, for example, the economist from who's spoken about a lot of technological disruption and all that. So, and also improving environmental issues. So,
all right. Eduardo, we've got to run. Thank you so much. Great story. Eduardo Thompson, Santiago Bureau Chief here at Bloomberg News.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week. And there was the first half of the day, trading day, and then there was the second half of the trading day. This second half, it's a risk on, or a little bit more of a risk on. I hate to go all in when the indices have moved so little in the green.
Investors wanted to see,
but off their
some
lows.
Investors wanted a little bit of clarity from Washington, and they got just a little bit.
Yeah, and gone from more than 1% declines to now being fractionally higher. All right, we're going to talk about that in just a moment. We're going to talk about the chart of the day in just a moment. But first up, back to that trading day and Charlie Pellet.
Thank you very much. Let me begin with that little bit of clarity here. The Senate GOP leader Mitch McConnell offering Democrats an agreement on raising the debt ceiling into December, alleviating the immediate risk of a default. Stocks overcoming earlier losses higher across the board right now. 28 minutes to go ahead of the closing bell. Going to be very interesting to see how this all shakes out and if these gains stick today. S&P up now by 8, a gain there of 0.2%. The Dow up 43, higher by 0.1%. NASDAQ holding on to a 35-point gain now, up by about 0.3%. 10 years up 1/32. 10-year yield right now 1.52%. Spot gold up 0.3%, 17.64 the ounce. Crude is down 2.5%, 76.96 a barrel on WTI. But two other major moves today. Natural gas, once again, cannot ignore that story. Nat gas down now by 9.9%, 568 per million BTUs. Bitcoin surging another 6.8% today. 54,979 on Bitcoin, up by more than $3,500. Again, S&P up by 7 right now, up 0.2%. More companies are implementing vaccine mandates. Southwest Airlines this week, for example, said its workers will have to get shots by December 8th. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
I think the vaccine mandates reassure individuals that this is the right course of action, has given that little nudge, but it may have also caused a divided workforce. We saw some hospitals where the majority of the staff resigned because they were anti-vaxxers. And so vaccine mandates in some situations may have had the opposite effect of dividing the workforce.
Dr. Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking vaccine stocks, Pfizer down 1% right now. Its German partner BioNTech, its ADRs down 5.9%. ADRs of AstraZeneca down 0.3%. Moderna lower now by 8%. Johnson & Johnson down 0.1%. Earnings after the bell today, Levi Strauss shares dropping by 4.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. Well, I know the song.
Okay. You do?
Yeah. Oh, I think. I mean, unless the Beatles didn't write the song.
They did.
Okay, so it's a Beatles song.
It's a cover.
Yes, it is. It's a cover.
Give me this performer, like.
Oh,
give me the era.
No.
Oh, come
This is brand new, Carol.
Oh.
They're calling it Drum Together. It's a benefit for Why Hunger. There are more than 100 drummers on the song.
That is so cool.
Isn't it, though?
Oh, my God, I love that.
Yeah,
I mean, I don't love the hunger, and I don't love that they have to do that because so many people are hungry, but that is a pretty cool concept.
Yeah, absolutely.
Sounds like a little hint. Young, old,
Yes, so everybody.
No, this performer. Or do we have to guess the performer?
I'm telling you, it's a one-off special benefit song.
So who's singing it?
Who's the voice?
Well, I mean, Let's see.
Do
The
you not
voice
know?
is a woman named Abigail Chapin. But what's more interesting is the drummers. I mean, you go through the list, which you can
Sorry,
get.
Abigail. Tim and I like you.
Okay.
Dave's for the drummers.
But, I mean, that's the whole point of this track. I mean, Chad Smith from the Red Hot Chili Peppers.
Cool.
Ringo himself.
I bet.
Max Weinberg from Bruce Springsteen and the E Street Band. And even, Nandi Bushell, the 11-year-old who had the drum off with Dave Grohl.
So great during the pandemic.
Yes, she's on it too. So,
what about the younger Weinberg? Didn't he tour with?
Actually, you are correct.
Thought I heard him.
I shouldn't say that. No, he's not on the list here. I'm going through. It's at yhunger.org/drum.
Drum for Hunger.
Yeah, absolutely.
That's pretty cool stuff.
Yeah.
That's really, there's a great, that tribute to George Harrison. Clapton put together this concert. It's a killer concert.
Right.
And you can see a video of it. But there's a point where there's Ringo and a couple of other drummers on a couple songs. And just like to see them together play on a bunch of Harrison songs, pretty incredible when you get a bunch of drummers together. Anyway, take it away, Dave.
All right, let's do. I mean, and I just felt like playing that one.
Yeah, I like
it
the
wasn't
intro.
like it really ties into the chart. Because it's all about valuation and how it's sort of played out with the S&P 500. And Keith Lerner of Truist Wealth, who's their chief market strategist, had his monthly research report out yesterday. And among other things, he looked at forward earnings for the S&P 500. In other words, a price earnings ratio based on profit projections for the next 12 months as opposed to past results. And what you see when you compare the forward PE with the index itself is that it had been coming down as the index was rising to records. Yeah, which that's something not so intuitive about that, but it tells you that earnings estimates were rising faster than share prices. And what's happened since then, more recently in the past month, is that you've had stocks come down and you've had that forward PE fall even further. So lately, you're right around 20 times earnings. You go back to the beginning of the year, you were just above 22 and a half. So, I mean, and Lerner acknowledges it's still a high number, but it's not as high. So a positive for stocks in that regard. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave, give us your stock of the day.
Manchester United.
Ooh.
The English
Football.
Soccer.
Well,
football.
okay.
If you're in
Shame
England,
on
it's
you,
football.
Stanovic.
If you're here, it's soccer.
Okay, well.
I mean, you're talking about a company that has its main listing in the U.S., was originally taken over by Malcolm Glazer, who died in 2014. His 6 children control the company. And they've been selling shares lately, and 2 of them sold a total of 9.5 million shares. And they did it at a price 11% lower than yesterday's close. So now the stock's down about 14.5%. Manchester United ticker ManU, M-A-N-U, in keeping with the team nickname, headed for its biggest loss since going public in the U.S. in 2012.
2 words, Ted Lasso. That's all I've got for you.
Check out Dave's stock of the day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave.
All right, let's get to world and national news. Nancy Lyons in our 99.1 newsroom in the nation's capital. Take it away, Nance.
Thanks, Carol. President Biden and Chinese President Xi Jinping have reached an agreement in principle to hold a virtual meeting before the end of the year. That's what we're hearing from a senior administration official. The news follows a 6-hour meeting between National Security Advisor Jake Sullivan and his Chinese counterpart in Zurich. U.S. Secretary of State Antony Blinken spoke with Bloomberg earlier today about China's recent military maneuvers around Taiwan. He urged leaders in Beijing to stop such behavior for fear of a miscalculation.
Look, the actions we've seen by China are provocative and potentially destabilizing.
Blinken tells Bloomberg the U.S. hopes China's actions will cease because there's always the possibility of a miscalculation. Senate Republican leader Mitch McConnell is offering Democrats a short-term deal on extending the federal debt limit. McConnell says Republicans are willing to agree to extend the limit to December. That would temporarily avoid a looming default on debt obligations by October 18th. The Republican change in approach follows a meeting President Biden had today with bank CEOs, including J.P. Morgan Chase's Jamie Dimon.
We should never even get this close. There are huge economic costs already being borne by companies and lawyers trying to figure out what this means if something like this ever happens.
Dimon says the effects of a default would be cascading, so day one would be bad, but the cascading effects in the ensuing weeks could go anywhere from a recession to a complete catastrophe for the global economy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Masser, Tim Stanovic in our Interactive Brokers studio. What do you got for me?
Amazon's Twitch hack. It shows the top gamers rake in six-figure payouts. Check this out. So an anonymous hacker attacked the video game streaming platform Twitch. Remember, it's owned by Amazon. And earlier today leaked a trove of critical data, including Twitch's source code and a spreadsheet detailing earnings for the platform's top gamers. So ordinarily, like the hack would be the news, but the salary and how much the gamers make is really fascinating.
How much do they make? How much
Okay, so a document listing Twitch's top earners shows that gross earnings since 2019 reached $9.6 million for the platform's top account. That's one account. Critical Role. The account is a set of voice actors, according to their Twitch page, generated an average of $370,000 a year, according to the document. The list points to 13 accounts that have made more than $108,000 a year, and at least 80 who've collected more than $1 million since 2019.
So it just shows you how much money is involved.
Should we be streaming gaming?
What do you mean by we?
Yeah, not me.
Yeah, it's interesting, I guess, right? And there are so many worlds, I feel like, that there's not as much information, and then something like this happens, and you really do get a little bit more, a wider window into what's going on.
Right, it's not a lot of transparency in a world like that. You have to rely on, analysis from third parties, and then also understanding, okay, wait, to what extent is this person who is at the top going to share? And, you also hear the stories about are people who have one-off paydays or one-off accounts, to what extent is that shared across many different accounts, right?
Right, exactly. Who are you waving at?
Shri.
Oh, okay. I was just curious. I'm like, hey.
The Office is when
I know.
If you're watching on YouTube, you can kind of see this, but the Office fills up.
We're in a fishbowl.
Yeah.
And people go by and
I've been here a year now, so I know people.
I know. Now you do. It's
people
really
walk
nice.
By.
I know. You're like an oldie now. It's an interesting story, but as we know, this whole idea of also the source code being exposed, as we all know, that's never a good thing. And it just reminds us that security within this world, our increasingly digital world, security is just so important. You are listening to Bloomberg Radio.
headlines and breaking news.
Okay, guys, let's move on. I will stop for British pound, and I'm going to place stop to 135.79.5. Okay, it will give us 5 pips. So if it will change direction, we will sell at this price. So please move your stop to this level. Stay safe.
By 12 points, higher by 0.3%. Choppy session, the Dow higher by 73 points, up 0.2%. At the worst level of the day, the Dow had been down 459 points, down 1.3%. NASDAQ holding on to a 42-point gain right now, up by 0.3%. NASDAQ 100 index up 0.4%, but the Russell 2000 trading lower by 0.7%. 10-year yield 1.52%. Spot gold up 0.2%, 17.64 the ounce. Energy making news again today. Natural gas plunging 9.8%. Nat gas 5.70 per million BTUs. West Texas Intermediate crude down 2.5%, $77 a barrel. Among the companies reporting after the closing bell today, Levi Strauss. Levi shares trading lower now by 4.9%. Recapping, Bitcoin 54,950 right now. S&P up 10, a gain of 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
As the Treasury Department approaches its $28.4 trillion statutory borrowing limit, it's been resorting to extraordinary measures to ensure the U.S. meets its obligations. If Congress can't reach a deal to raise the debt ceiling soon, the country may well default, creating a financial crisis. It was once plausible to argue that the debt ceiling had a salutary effect. With so much of the federal budget expanding on autopilot, it provided an opportunity to force lawmakers to reckon with rising costs. Yet the federal debt keeps rising, and deficits keep widening. Not only that, but debt limit brinksmanship itself imposes hundreds of millions in additional borrowing costs each time around. It's clear by now that the risks posed by the debt limit far exceed its theoretical benefits. No other country routinely toys with defaulting on its obligations. Enough is enough. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPI and go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10 minutes left in today's trading session. You heard Charlie breaking down the trade, and we are definitely seeing quite a reversal in the Wednesday session. We are off our lows of the session and up near our highs. Let's get to it with Anna Han. She is Vice President and Equity Strategist at Wells Fargo Securities. She is on the phone in New York City. Anna, nice to have you back here on Bloomberg Radio. It has been an interesting market environment. Heading into today's session, we could have seen a fifth day where we had more than 1% moves on the S&P 500 to the upside or downside. But if we stay on track, that's not going to happen today. How do you explain a day like today in terms of the trade?
You're right, Carol. It's been a very volatile couple days for the S&P 500, the equity market overall. But today's move particularly, I think you got to put it into the morning session and the afternoon session. This morning, you're seeing sort of risk-off sentiment. People started getting actually concerned about the debt ceiling, what happens if it's not extended, and then boom, 1 p.m., around 1:15, you get news that the GOP is willing to come and extend that and negotiate and come to the table. And you saw the equity rally, just a sigh of relief over at least the immediate concern being lifted. And I think that's the action you're seeing today.
Does it just repeat, though, when we get to November, when we get to December? The same sort of concern about D.C. and stalemate there?
It's possible, Tim. We are far from out of the woods here. As I said earlier, it's not like everything's peachy just because we got this extension. We got this extension, and now we need to see if we can actually turn it into a permanent lift of the ceiling or how that matter will be addressed. But, some other factors that we consider as well is all this strong economic data coming out, also bringing in concerns about what the tapering timeline will look like. So you've got a lot of macro factors in this witch's brew here.
Yeah, no, that's a good point too, right? It's a mixed feeling, right? ADP employment change coming in significantly stronger than forecast, and we'll get that monthly jobs report come Friday. Signs that, as we hoped, more people coming back to work, and that's a sign of the economy getting back to where it was, fingers crossed, pre-pandemic levels. But at the same time, it also means these, unprecedented stimulus measures, the Fed taking its foot off the gas pedal. So we've got to kind of figure out those things and what that means for corporate earnings. What will it mean for corporate earnings? Because that will ultimately really determine the buy-in by investors, certainly on the equity side of things.
Right. You mentioned a lot of things there, Carol. Let me see if I can separate them out. So, one thing, you have jobs data looking better. Good news is good news.
Right.
It means we can slowly take the training wheels off here, and that accommodation coming off the table, it's a good sign. But with that, of course, as a concern, yields going higher, how is that going to impact corporates and their earnings? Now, if you think about it, obviously, mathematically, you're going to see this different discount cash flow model. But generally speaking, for the corporates here, the bigger concern is what's going on with the supply chain. Now, you mentioned something, this back to work. You're right. With the fall, kids going back to school, and also the peel back of the extra unemployment benefits we had, you have more and more people going back to work. And it's no surprise that that's going to help the labor shortage we've had. And with the helping of the labor shortage, people going back to work, that's going to help ease the supply chain issues we've had. And I think overall, that will help things later down the road for corporate earnings.
What about when it comes to inflation and how you're keeping an eye on the way that affects margins? You mentioned supply chains, and I talked to Gina Martin-Adams from Bloomberg Intelligence. She's a chief equity strategist at BI, and she's concerned that investors aren't paying enough attention to how sticky inflation is going to be, and we're going to start seeing that play out in upcoming earnings reports and really hitting margins because companies can't pass along those costs to consumers.
You bring up a great point there, too. What if inflation is here or higher and here to stay longer than, quote unquote, the transitory view that a lot of people are taking? With that, I would say that when you look at the earnings early reporters, the best temperature check for us to see how they're doing, if they're able to hold margins and pass along price, is to look at corporate earnings, see what they're saying in those transcripts. And so far, it's a bit of a mixed bag. There's certainly concern that maybe we won't be able to pass along those prices, but so far, corporates have been able to. That's our initial take. Now, as we go through this earnings season, the more information is revealed, the better grasp we're going to have on it. But for now, we have to realize that even if you have an issue this quarter, for inflation to be high enough for the Fed to bring forward their rate hike schedule, that's got to be a very big number, a very big concern. And for us, that's still not our base case scenario.
Right. It has to be a consistent trend, not just a one-month thing. It needs to be a steady trend line so that the Fed feels comfortable enough to ease off and not have to potentially come back again in to reverse course. Having said that, stagflation, we're increasingly hearing the S word. Just quickly, Anna, what are your thoughts about that? Is that something that you guys are discussing a lot there over at Wells Fargo?
I wouldn't say it's really the main concern here. It's something we are watching, like we said. When you have this sort of environment where, especially data being reported, there's a lot of uncertainty around these numbers. Let me take, for example, the whiff on the estimates or the projections for, non-farm payroll. You still see that all that uncertainty here makes it possible that you have these scenarios of what if we get stagflation? What if pricing power is not what we think it is? For us right now, not the biggest concern, but again, if something were to change, if we were to see some big red flags in this earnings season, that would be the first hint we look for.
All right, we're going to leave it there. Hey, listen, thank you so much. Anna Hahn, she is Vice President and Equity Strategist at Wells Fargo Securities, joining us on the phone in New York City. And as we speak, we are just seeing another leg up on those major equity averages. So there's a good chance we're going to finish at our highs of the session. What does that mean? Up about 0.4% on the S&P 500, up about 0.3% on the Dow Jones Industrial Average, and the NASDAQ better by 0.5%.
Look, Anna Hahn is right. You have to separate this trading day into the before the news from McConnell and after that news, because a little bit after 1 o'clock, we saw stocks come off of their close to session lows, and look, we're finishing the day close to session highs, if not at session highs.
Exactly. And so very interesting to see some buying into the close here. All right, folks, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenivek. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. We're counting you down to the close on this Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hodge, Shanali Bassick in for Taylor Riggs, counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast. Carol Massar and Tim Stenivek bringing together all of our audience across television, radio, and YouTube here. And right now, Carol, we're looking at an S&P 500 that was significantly lower on the day, and now I guess you can call it significantly higher. What do you make of this?
Yeah,
and keep it clean.
All right, kids. I'm going to try and use my words very carefully here. It's been a two-part day. We saw selling in the beginning half of the day. We saw buying after that news out of D.C. But what's interesting is, we're still below our 50-day moving average. The technicians have to be watching this. And our Abigail Doolittle, earlier saying that trend line, that 50-day continues to move lower. So when it comes to dip buying, we're seeing less buyers come into the market, Tim.
Hey, how about Bitcoin surpassing $55,000 higher by close to 7% on the day, Caroline? We did get a little bit of the worry of the concern from Washington, D.C., a little bit of that alleviated, but I'm still thinking about inflation. I did speak to Gina Martin-Adams at Bloomberg Intelligence for the Bloomberg Invest Conference. I know you guys had a lot of that on today's show, and she said investors need to take seriously inflation, the idea that it's stickier than policymakers are saying, and that it could start to hit margins, and we could see that in earnings reports coming out in the next few weeks.
But I wonder if almost today inflation risks came off the boil a little bit as those extraordinary moves in gas prices, extraordinary moves across the commodity spectrum just dialed down a little bit. I mean, who would have thought it would be Putin to the rescue there?
Yeah, Putin to the rescue, and JP Morgan with the $130 oil saying it's all right if that's okay.
43.19. That was your open on the S&P 500. Your low of the day was 42.90. Right now, we're sitting right around 43.63, which is right around the highs of the day. That's up by about 0.4%, 18 points on the S&P 500. Dow Jones Industrial Average up about 0.3% or 100 points. The NASDAQ Composite going to finish the day up right around 68 points or about 0.5% here. Interesting move, though, in the Russell 2000 here. You're talking about a day here where you talk about buying the dip. People weren't necessarily buying the dip when it came to cyclicals. The Russell 2000 actually opened only down about 0.1%. It got down to about about 2%. It's going to finish the day down by about 0.6%. That's a lot of 0.1% there, but what it tells you there, Carol, is that a lot of folks here aren't necessarily gravitating back to some of those cyclical trades.
Don't you find it interesting on a day where the S&P 500 erases that 1.3% loss, biggest reversal since February, and you have the VIX actually dipping back a little bit? This was a fair amount of volatility, and that I feel like when it comes to the markets, there's a lot of questions out there, but that's one thing I feel like we can be pretty consistent about. There's a lot of volatility in this market.
And heavy trading as well amid that volatility. What was interesting, if you look from an industry perspective, that all of the winners yesterday became kind of the losers today. We see energy, your underperformer, off by 1.25%. We were talking about it, how gas prices screeched back down. Oil came off the boil a little bit as President Putin, energy off. We're seeing the likes of materials on the downside, auto companies as well on the downside, semiconductor equipment. That had actually been an outperformer yesterday. They're on the lower side. But on the upside, actually your bond proxies, there's a good Taylor Riggs kind of a line. Utilities up more than a percentage point. We're seeing also real estate do relatively well. Why? Well, yields actually crept down that little bit today.
Yeah, and I'm thinking about what you said about Putin to the rescue. We are living in unusual times. All right, let's get to some of the gainers. NetEase topped that list up 6.6% here, 88 and change. Jeffrey's out saying the Chinese video gaming company's shares could gain in the fourth quarter on the possible release of Tencent's League of Legends Wild Rift, and expectations that China could begin approving new games in November after holding off on approval.
What's also down is most FX versus the US dollar today. I'm trying to struggle for a narrative here because in the market in the stock market, we felt a little bit more optimistic about the debt ceiling, whether it be about, of course, relations between US and China, whether the ADP employment report came in better than expected. But in FX, it seems to be the narrative that actually we're a bit risk averse. We're coming out of most things and going into the US dollar. We're perhaps Japanese yen, the second best performer in that respect. So the euro's off by 0.3%. We've been talking a lot about the Kiwi with Sherry Ann, of course, off by 0.7% as the central bank seems to be moving there, unexpected by Bloomberg Economics. Meanwhile, overall red on FX, red on commodities. And this is perhaps also a story of in the metal spectrum, people worrying about growth, whether or not we'll see inflationary pressures and overall growth be stymied, and that meant that metals fell, copper down. We also, though, saw a significant plunge in natural gas. That as we hear President Putin saying, look, maybe I could ease that gas crunch over in Europe. We see also WTI crude come off as we worry less about supply chain issues there, worry less about the supply concerns. WTI crude off by 2.5%. All of this muddies the picture for me, but overall I'm looking at, well, money moving into Canadian bonds to a certain extent, into the UK for once. Remember, they've been selling off significantly in the UK on the back of the gas increase in prices, inflation concerns.
Yeah, and you talk about yields back here in the U.S. Did see some activity on the short end of the curve, as well as in that belly here, particularly around the 7-year here. But relatively where we stand right now for the last couple of days here, 152 on your 10 and still holding above 2% here on the 30-year yield. Your 10-year break even still camped out right around 244 basis points here. And this really brings us to the broader question here about whether you start to protect yourself against higher rates and against inflation. There was a great note out, guys, by Citigroup's global equity strategist, Robert Buckland, talking about this issue and how investors in the equity market should protect themselves against rising rates, actually saying that value stocks might actually be where you want to gravitate to, not necessarily for the return, but I guess because it'll be less bad than growth.
Yeah, exactly, less bad than growth. And if you take a look at the best performers, the major industry groups in the S&P 500, there are 11 of them. The second best performing group is financials. They're up about 31%. So we have seen that investor movement this year, and some of it has to do with the improving rate curve and the prospects and what that means certainly for banks in terms of making money. But yeah, you're seeing kind of movement, Tim, certainly within the market.
Yeah, I did find that note. I did find that note from Citi really interesting because, as you mentioned, Carol, when we see that movement in rates, and we do think that those rates are going to move higher, then certainly banks do well. But then again, the growth stocks don't do as well. Even the high-flying tech stocks that could potentially have their cash flows discounted more with those higher rates, and that's why we've seen this sell-off in tech in recent days.
And then, of course, you had out the commentary by Mike Wilson, of course, over at Morgan Stanley, who, of course, has been right on so many things here, and he talks about the volatility out there and really kind of how you sort of protect yourself heading into this earnings season. This idea, he's really been really good about this, Caroline, this idea of sort of where we are in the economic cycle, and based on where you think we are, that's going to dictate how you invest.
And so many of those conversations happening at the Bloomberg Global Invest Summit. I was speaking to John Rogers, of course, legendary value investor, who unsurprisingly thinks this is a good time to be getting into value, but not calling out the banks, calling out instead some of the opportunities in sports-related companies, in Madison Square Gardens and the like. We're also speaking, though, Bridgewater Associates co-CIO Greg Jensen, he was over at the Invest Global Summit. He was talking about inflation risks, about interest rate risks. Take a listen.
The problem is stagflation. That's the real risk. And so many portfolios are massively exposed. And there are ways to hedge that risk, to try to arbitrage that difference between the likely nominal outcomes and those available in financial assets today.
And I know there were so many important conversations going on. Shonali, you were talking private equity, of course.
Yeah, absolutely. And a lot of concerns, right, about decelerating growth as people shift towards those value names.
The dreaded S word, stagflation. All right, that's going to do it for our cross-platform coverage Beyond the Bell on Bloomberg Radio, Bloomberg TV, and YouTube. Catch us again, same time, same place, tomorrow.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Radio, and we've got earnings out from Levi's.
Yeah, Levi's coming out with earnings. Third quarter net revenue, $1.5 billion, beating estimates of $1.48 billion. Third quarter EPS, 47 cents versus 7 cents year over year. Third quarter adjusted EPS, 48 cents, beating estimates of 37 cents, and third quarter adjusted EBITDA, or EBIT, I should say, 222 million, beating estimates of 198 million.
All right, so big beat on the top and bottom line, and that is certainly being seen in the stock in the after hours. Right now, up about 4% here in the after hours. Keep in mind, Levi Strauss ahead of the move in the after hours, up to almost 21% so far this year.
We're going to be chatting with the CEO, Chip Bergh, tomorrow on Bloomberg Business Week. In the meantime, a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Hey, Tim. A virtual meeting has been planned between President Biden and Chinese President Xi Jinping. That's according to a senior administration official who briefed reporters after a 6-hour-long meeting today in Zurich between U.S. National Security Advisor Jake Sullivan and his Chinese counterpart. The official says details for the meeting between the leaders still need to be worked out, but it's hoped it'll happen sometime before the end of the year. Speaking of things that still need to be worked out, lawmakers are trying to raise the debt ceiling. Senate Minority Leader Mitch McConnell seems ready to offer Democrats an option to pass an extension through to December. Bloomberg's Washington correspondent Joe Matthews says it gives McConnell a chance to play hero.
Mitch McConnell can now take credit for helping the country avoid default. He can say the party in power never had a plan, and if it wasn't for Republicans, we'd be going over the fiscal cliff. Mitch McConnell, never one to miss an opportunity, a political opportunity when it's there. He's been on both sides of this, on the minority side, on the majority side, and he's using his experience now to his benefit.
Matthews says McConnell is still criticizing Democrats for not managing it on their own. Police in North Texas say they've arrested the suspect in today's high school shooting west of Dallas. 4 people were injured. 3 of them remain hospitalized. Arlington Assistant Police Chief Kevin Colby says the suspect is 18-year-old Timothy Simpkins, who's a student at the school.
He will be charged with aggravated assault with a deadly weapon, 3 counts.
Colby says the shooting followed an argument. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
I love my Levi's.
Yeah?
They're like classic. And they've creator of jeans way back when. And then, of course, it's been a market that's just been crowded with all kinds of different jeans. And they've had their ups and downs.
They have. In terms of Bloomberg Intelligence, though, Levi's has a 10.5% market share of ages 15 to 25, so it comes in second after American Eagle. But we want to talk earnings. The company reported adjusted earnings per share for the third quarter that beat the average analyst estimate. It shares moving in the after hours right now. Adjusted earnings per share came in at 48 cents versus 8 cents year over year. The estimate was in 37 cents. Earnings per share, or adjusted net, $197 million in terms of revenue versus $93 million quarter over quarter. That did beat the estimate of $147.6 million.
All right, so that's third quarter. Looking ahead, and we care about what companies have to say about the outlook. The company sees fourth quarter net revenue growth of 20 to 21%. That's year over year. Fourth quarter net revenue growth 6 to 7% versus the fourth quarter of fiscal 2019. Raising its fiscal 2021 outlook. Here it is. It sees the fiscal year adjusted EPS of $1.43 to $1.45. Had seen $1.29 to $1.33. So there's your raise. Also, this is a big deal, and we see this from a lot of companies. The board of the company of Levi Strauss authorizing a $200 million share buyback program. So the stock, which jumped roughly 3-4% initially in the after hours, still higher by about 1.5% in the after hours. So definitely moving here, and investors liking what they got. And we're going to talk with the company's CEO tomorrow right here on Bloomberg Business Week.
Yeah, Chip Bergh, the company's president and CEO, he on a statement just now saying, quote, "We delivered a strong quarter with revenue growth versus pre-pandemic 2019 levels, despite a more difficult macro environment than we expected." He said that these results reflect the strength of Levi's brand, improving momentum in our direct-to-consumer business, and the scale and agility of our supply chain network, where we have executed against macro headwinds exceptionally well. We're going to talk to him about cotton prices.
You talk fast, you know that?
We're going to talk about, there's a lot to fit in here.
There's a lot. Supply chain, clothes, impact on the environment, consumer demand. We got a lot. I love Tim Stenovec. I'm just going to say it. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story and a headline from the Bloomberg Professional Service. Twitter will sell Mopub to Applevin for $1 billion in cash. Twitter shares after hours up now by just about 3%. Levi Strauss boosting its adjusted earnings per share forecast for the full year. That guidance beating the average analyst estimate. Levi Strauss shares up right now by 2.7%. What a day on Wall Street. What a reversal. At one point, the Dow was down 459, down 1.3%. The Dow ended the session at the best level, up 102 points, up by 0.3%. S&P have been down 55, ended the day with a gain of 17, up 0.4%. NASDAQ up 68, a gain of 0.5%. 10-year yield 1.52%. Stocks whipsawed in heavy trading as Republicans were poised to offer Democrats a way to end the debt limit impasse. At Bitcoin surging now to $55,241. Bitcoin up now by 7.3%. Natural gas plunged 9.8% today, down to $5.69 per million BTUs. West Texas Intermediate crude down 2.4%, $77.06 a barrel. Gold up 0.2%, up $3.69 the ounce to $17.63. So again, recapping a reversal for stocks today with the S&P up 17, up 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So late last month, Bain put out its Technology Report 2021. It's 92 pages of the new technology economy. There's a lot going on, everything from big tech, M&A, venture capital, software, hybrid cloud, talent wars, chip shortages, supply chains. These are two things that we talked about with Michael Dell of Dell just yesterday. And layering over it all, Tim, is the U.S. and China decoupling. We talked about that with Eric Schatzker based on his conversation with Ken Griffin over at Citadel.
Yeah, he said that, and he reminded us that Griffin warned that the U.S. should not decouple from China.
Right, exactly. Pretty adamant about it. So let's see what Ann Hecker has to say. She's head of America's Technology and Cloud Services practice and also head of the Semiconductor Group based in Silicon Valley. She is on the phone, and this is over at Bain, on the phone in Palo Alto, California. Ann, Tim and I have been looking forward to this conversation. Welcome to Bloomberg.
Thank you.
Hey, tell us a little bit about when you guys put together a report. You probably get a lot of information, a lot of research that's done. Is there something, though, that just rose to the top, like this is going to be at the top of everyone's mind when it comes to anything and everything in the technology space?
Yeah, it's a great question. And as we looked at our technology reports this year, what we really did was take a fact-based view to look at all of the different trends which we've been following for years and really trying to understand what was the impact of COVID-19 and the global pandemic we've all been experiencing. And one thing that we found was it really was an acceleration of a lot of the technology trends that we've been following. And a lot of that's based on not only the research we did for this report, but over the past 18 months, we've been talking to our CEO clients, talking with a lot of CIOs to understand how are they seeing different technology trends as it played out during the pandemic, kind of quarter over quarter. And what we saw was really an acceleration of a lot of trends like cloud-based infrastructure, cloud-based security, AI, as-a-service offerings, and then, accelerations of some like PC and hardware sales as a service for remote work as everyone transitioned to work from home and school from home. So really just an acceleration across the board in a lot of the different tech trends we've been following for years.
Well, how much of that was pulled forward for, because of the pandemic, and to what extent is there sort of going to be a pause in 2022 because people did a lot of those upgrades in 2020 and 2021?
Yeah, that's a great question. And it probably varies a little bit by sector within technology. I think some of the big ones where we saw a lot of growth, so again, cloud-based security, moving towards the cloud-based infrastructure, was a trend that we've been watching for years. And if anything, this just accelerated it. And we think it will continue to accelerate. So it pulls forward some of the adoption. But now I think just the use of those new technology trends will continue to expand as
okay, traders, I'm going to move our stop even further. Please place your stop for British pound to 135.84.5. Okay, just right here. I don't want to hold on overnight this long position, so hopefully I will sell it any minute right now. Please copy this trade and please move your stop on profit to this level. If you want to get a strategy, you have to go to company.co.uk and you can purchase strategy from there. Stay safe.
And he also talked with Citadel's Ken Griffin, who said, we should not be decoupling the United States from China, that we should be having that relationship. We know just a little bit earlier today, President Biden said he plans to meet virtually with President Xi before the end of the year. We know tensions between the two largest economies have been rising once again. And are you anticipating, there you are in Silicon Valley, what are the conversations that you have with people from different parts of the tech community? Are we going to have kind of two separate huge two huge tech movements, those aligned with China or China just on its own developing technology, and then kind of the Western world, the US and others moving ahead on technology?
Yeah, it's a great question, and one that we have spent a lot of time thinking about for quite a few years now, around just the relationship between U.S. and China and how does it evolve. And it really has accelerated, I think, over the last couple of years. So when we think of this in decoupling, even 2 or 3 years ago, we used to lay out 3 scenarios that, we used to be in a world of more globalization, and then we moved to one of globalization, which is a term I think the economist coined, where there would still be global trade, but there'd be more tariffs, more sanctions that would slow some things down. And then the third would be, do we move into a more decoupled world where you really do start to see the development of independent economies and supply chains that really just have fewer linkages across those? And we used to debate of how fast would you be moving towards that more decoupled scenario. And I think we've moved faster than anyone expected. I don't think it's going to be linear. I think we'll probably move some to the left, some to the right over time. But a few data points that have really, I think, show this is if you look at foreign direct investment,
right.
Yeah.
Tech-related foreign direct investment has dropped 96% from 2016 to 2020. And if you click under that, Chinese investment in the U.S. fell off very quickly, kind of around 2017. In the U.S., has been a more steady decline.
Hey, Ann, hang on a second, because we've got to do a little bit of news, but we'll come back and continue our conversation. Ann Hecker, head of Bain America's Technology and Cloud Services practice. We'll get back to her in just a moment, right here on Bloomberg.
SiriusXM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Do you ever think about what will be the big technology trends that we'll be all spending so much time on in a few years?
I was trying to ask Michael Dell that question yesterday, specifically when it comes to hardware. I mean, this is a guy who spent his life working with hardware, and you know, it makes sense. Like, he talked a lot about the data and the data processing that will come as a result of that. But what are we going to be doing? Are we going to be wearing wearables like those Facebook smart glasses?
Playing around in the metaverse.
Playing around in the metaverse, VR goggles,
Yes,
Apple
maybe.
Watch. Yes,
I don't know. All right, let's see what Charlie Pellet. When you think of technology, Charlie, what are you going to be playing around with?
Without a doubt, getting from here to London, NASDAQ, sorry about that, but getting between here and London, first of all, technology that actually works when it's supposed to work, but getting from here to London.
I think there was a human element in there.
I would, you know what, blame the tech guys. That's what everybody does. Blame technology. But listen, getting from here to London in under an hour, how cool would that be with technology in the future?
Except I like being on a plane, napping, reading, watching a movie.
I'm with you to a point.
Okay.
Anyway, here's what's going on. I do want to begin with Twitter because it has agreed to sell MoPub to AppLovin for just over $1 billion in cash. Also, after the closing bell, we heard from Levi Strauss. It boosted its adjusted earnings per share forecast for the full year. The guidance beating the average analyst estimate. Levi Strauss, after hours, up now by 2.7%. Stocks whipsawed in heavy trading as Republicans are poised to offer Democrats a way to end the debt limit impasse. We did hear from Anna Hahn, equity strategist of Wells Fargo Securities, right here on Bloomberg Business Week.
It's not like everything's peachy just because we got this extension. We got this extension, and now we need to see if we can actually turn it into a permanent lift of the ceiling or how that matter will be addressed. But, you know, some other factors that we're considering as well is all this strong economic data coming out, also bringing in concerns about what the tapering timeline will look like. So you've got a lot of macro factors in this witch's brew here.
Today, the S&P up 17, up 0.4%, witch's brew. Hey, it is October. We've got the Dow up 102, up 0.3%. NASDAQ up 68, a gain of 0.5%. 10-year yield 1.52%. Gold up 0.2%, 17.63 the ounce. Crude, West Texas Intermediate up 2.4%, 77.07 a barrel. ARC Investment Management, that's the firm run by Kathy Wood, joining the financial industry shift south to Florida. ARC closing its New York office permanently at the end of October and relocating its corporate headquarters to St. Petersburg, Florida. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Want to get back to our conversation. Still with us is Ann Hecker. She's head of Bain's America's Technology and Cloud Services practice, and she is still with us on the phone in Palo Alto, California. And you know what's great about talking with folks like you? You guys talk with a lot of different companies. A lot of them are your clients. You do the research to try and figure out, you know, what's coming. And then I think about our audience who's listening to it. They're investors. They're trying to figure out what are the next waves. We love talking with the CEOs who are the disruptors, the innovators, or the investors in the disruptors and the innovators. Who do you think are ultimately, based on the latest tech report that you guys put out, who are the winners and losers?
Yeah, that's a great question. When we look at it, part of the report we looked at was just how much technology has really broadened in its impact across all industries. So sometimes we look at, you know, the tech companies, but we also looked in this report about how companies outside of traditional tech channels, so your retail companies, financial service, healthcare, consumer products, and the research there, we showed that companies across all industries that take a more tech-driven strategy or have a lot of tech as an underpinning in their business model are actually outperforming others in their own industry. So while we can think of technology companies as a vertical in and of itself, the enabling aspect of technology and embracing that across all different industries, companies that have successfully done that are outperforming their peers that haven't done that yet.
And can you give us, just for the sake of case study or so people understand examples, can you share historical examples where one company has embraced that type of shift and one hasn't, and we've seen outperformance?
Well, sure. So you can see some of the examples would be ones your listeners are very aware of, like companies like an Amazon or an Alibaba, kind of in the consumer space, that really just are kind of what we would call born tech, right? That they were born with a technology underpinning. And then I think you can see some examples in industrials and financial services where more traditional companies have really embraced technology, either whether it be payments or how do they think about telehealth, where they've now added new lines of business or new ways of delivering their goods to the consumers, that they've kind of embedded technology into their delivery, even if they weren't kind of a born in the cloud type company.
Well, and it is really such an interesting time. And I guess we just keep wondering, you know, what is the next big thing in terms of our world and what happens? If there is a decoupling, I want to go back to that because that's where we started. If we have that decoupling, and it does seem like we're moving towards that because we are already seeing just a strained relationship, but we've been there before with China before. If we are, in terms of the tech world, it just means kind of two tech development verticals. That's how it plays out, and that's okay because there's still a lot of money to go around and still big markets to play in.
Yeah, that's where this whole decoupling gets very challenging, because if you actually look at the technology value chain, no one country can do it alone. Right now, we are still a very global supply chain, and it's a very unique value chain in that it's very segmented and highly specialized. So each country has areas where they're quite strong, and then also key competencies or parts of the value chain that they're missing. So, for example, China really needs semiconductor capital equipment that's mostly in the U.S. or Europe. They need access to leading-edge manufacturing process technology for semiconductors, which is strong in the U.S., Korea, and Taiwan. The U.S. really needs ODM capacity, PCB capacity, which is very heavily in China right now. The U.S. also needs more leading-edge silicon capacity, which, again, you know, the U.S. has some, but a lot of it's in Taiwan, a lot of it's in Korea.
Right.
And then if you keep going down the value chain, there's different areas where different countries have quite a bit, but everyone is still very dependent on each other, which is one thing that just makes decoupling so tricky is it's very hard to do right now. So I think companies and countries are starting to take steps and starting to make investments to try to make their own supply chains more resilient to these risks. But it's impossible right now for any one country to do it all on their own.
All right. We're going to have to stop on that note. Hey, Anne, thank you. Anne Hecker, head of Bain's Americas Technology and Cloud Services practices, joining us on the phone from Palo Alto, California. You know, Tim, we talk about in the Beyond the Bell some of the big macro stories. You and I mean, energy is definitely going through some changes as we move away from carbon to much more alternative energy. Supply chains, are we, you know, significantly changing the equation in terms of how companies manage them?
Do we see big changes following what happened with COVID and what happened with the supply chain crunch, with some companies building facilities here in the U.S., but it's a years-long process.
It's a long process, and that's why maybe to some extent you're seeing that discomfort in the markets, the dislocation, because it does take a while to do some of this. So we will certainly stay up to date on it.
Well, let's get a check of the latest world and national news now to Washington, D.C. with Ann Lyons. Hey.
Thanks, Tim. Senate GOP leader Mitch McConnell is apparently ready to offer Democrats an agreement on raising the U.S. debt ceiling through November into December. That would alleviate the immediate risk of a default. The proposal would push back the partisan confrontation over the debt ceiling, but it would not really resolve it. McConnell is meeting with Senate Majority Leader Chuck Schumer this afternoon. The shift from McConnell came after President Biden met with business leaders at the White House and warned them that the failure to extend the government's borrowing authority could set off a global financial crisis. This is Citibank CEO Jane Fraser.
America simply cannot default on the debt because the U.S. Treasury market is the bedrock of our financial system domestically and globally. And defaulting is going to cause lasting damage.
Fraser says lawmakers are playing with fire. The White House is defending its response to the pandemic when it comes to testing. While much of the focus has been placed on vaccinations, the U.S. trails many other wealthy nations in daily COVID test numbers. Today, White House COVID response coordinator Jeff Zients said the administration is working with several manufacturers to improve the availability of over-the-counter rapid tests.
We'll have available supply of 200 million rapid at-home tests per month starting in December, with supply of tens of millions of additional tests coming on the market across the next few weeks.
Zients says soon there will be 30,000 community-based sites in the country where you can walk in and receive a free COVID test. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Tim, it's time to play Let's Make a Deal.
Okay, I don't know where this is going.
Would you like a drone that delivers sushi, or would you like Steve Cohen's former NYC condo?
What if I get the condo and get sushi delivered by drone after I buy the condo?
How far up is that condo? I don't know what floor it is. Do we know what floor it is?
$36 million.
Yeah.
Right?
Yeah, that's probably more expensive than the drones. All right, so here's where we're going, everybody. It's kind of a wacky Wednesday. I'm just going to put it out there. Billionaire Steve Cohen, our Ashrat Carmel, who covers all things high-end real estate, New York City real estate. She puts out a story, billionaire Steve Cohen selling his luxury Manhattan condo in June, finally getting $30.5 million after multiple price cuts. The buyers who never moved in are now relisting the apartment for sale at an 18% markup.
$36 million.
Are they flipping? Is that flipping?
I don't know. Is there a flip tax also in this 9,000 square foot duplex penthouse at 1 Beacon Court?
I don't know. That's here, you know.
Yeah, I was just going to say, we're in that building right now.
Yeah, that's our, it's not our apartment, but it's where
I'm
Bloomberg
seeing pictures of
headquarters
this in the article. This is not what my office looks like.
Yeah, well, listen, the price tag on the apartment initially by Steve Cohen was $115 million. Talk about a discount.
Wow.
Right? Is that right?
Yeah, I mean, this was for sale for a long time. Shortly after the transaction closed, the buyers determined that they'd be spending more time on the West Coast and opted to resell the Beacon Court apartment rather than move in.
It's on the 51st and 52nd floor of the tower, has 24-foot ceilings. You could actually take that drone and fly it around in the apartment. Sweeping views of Midtown and the southernmost swath of Central Park is built back in 2005. Because we're in that building and we go up high, too, I've been on the 26th floor of our offices, and it is stunning.
I've been on the 29th floor.
It is, I'll see your 29th, and maybe I've been even higher.
I haven't. That's the highest I've been.
The other story, Alphabet's drone subsidiary, it's called Wing, is experimenting with launching its aircraft from the roof of an Australia's mall, only steps from the stores providing goods for delivery, and that maybe means delivering sushi.
Well, I'm still waiting for my packages to be delivered by drone.
That could get a little dangerous in this area.
It still hasn't been happening, despite Bezos promising years ago, right?
We've seen drones out on the water. That's a little creepy. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We're keeping an eye on Levi Strauss shares after hours. They are higher. Levi posted third quarter sales that topped expectations, a sign that consumers are still willing to shop for apparel despite ongoing uncertainty around COVID-19. The denim maker also boosted its full-year profit outlook. After hours, we do have shares of Levi Strauss trading higher by 2.5%. It turned out to be an up day on Wall Street. Throughout the day, though, you would have heard us at one point telling you that the Dow was down 459 points, down 1.3%. It reversed all of that to close at the best level of the day, with the Dow up 102, up 0.3%. S&P up 17, up 0.4. NASDAQ up 68, a gain of 0.5%. 10-year yield 1.52%. Spot gold up 0.2%, 17.63 the ounce. Stocks were whipsawed in heavy trading as Republicans were poised to offer Democrats a way to end the debt limit impasse. West Texas Intermediate crude down 2.4%. Natural gas, again, a major story today, down 9.4%, 572 per million BTUs. And Bitcoin now up 7.1% at 55,114 on Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Got a question for Charlie, got a question for everyone who's out there, got a question for my co-host. How would you like to work less, make more, and kind of do what you want?
Sign me up.
All in, right?
Yeah. Do you think anyone says no?
Probably.
To that question?
I don't know. I bet there are some super achievers.
Look, love our jobs, okay?
Totally.
But
Totally.
a 4-day work week could be cool.
I've done that, and that's a fun thing. I know. I'll fill you in later. Anyway, it is the subject of a new book by Joe Sanek. He is author of Thursday is the New Friday, How to Work Fewer Hours, Make More Money, and Spend Time Doing What
Okay, guys, it's look like 10 to 10, and we didn't fill this order. I will cancel order until tomorrow, okay? So we will cancel it, and please do so. Cancel your order, and we will sell it tomorrow, okay? Stay safe.
But it didn't pay as much as I would have liked. So anyway, how do we do it? How do we make Thursday the New Friday?
Oh, Carol, thank you so much for having me. One of the key elements that we're discovering in the research is that when you slow down, you actually do your best work. And we know this intuitively. When do we have our best ideas? It's not when we're stressed out and maxed out. It's when we actually slow down. We look at the Iceland study that came out just a couple months ago that tracked over 1,500 people that were looking at specifically that 4-day work week. And they found they were actually more productive than the 40-hour-a-week people. And so when we start to make this shift, we're seeing more creativity and productivity emerge from the research.
So how do you get, I understand how you can get employees on board with this, but how do you get employers on board? I mean, we live in a society that has a 5-day work week. So even though the research that you cite points to better productivity, and if we do things slow, we do them better, we're not really living in that mold right now.
Yeah, I think what we're seeing that's totally appropriate. During this book launch, I've done over 200 media appearances in the lead up to it. And so there are times that we sprint, but when that becomes our lifestyle, that doesn't give us the best outcomes anymore. And so when we look at industries that are moving away from just that industrialist mindset into more of an evolutionary mindset, they're testing, adapting, experimenting to see how they could take the menu items that I present in the book and apply them to their industry, and then have more of a curiosity approach to it rather than a one-size-fits-all approach. And so by walking through experiments and trying aspects of the 4-day work week for short periods of time, working through the challenges, and then attempting to find those solutions, that's where we see effective companies really start to make that shift.
What are the companies that you can cite right now that are actually doing this right now? Because some companies are actually experimenting with this. And you have countries too, like Iceland, for example, right?
Yeah. So Iceland, Spain, Portugal, New Zealand are all trying things out in regards to the 4-day work week as well. Microsoft Japan did it. I talk about them in the book. And then also we see Kickstarter that next year is planning and has very publicly talked about moving over to test the 4-day work week. I think that because we didn't see as much of these things occurring pre-pandemic, that right now we're in the very early research stages of what's emerging. And that's where publicly talking about these experiments and seeing what works in specific industries, there are industries that aren't going to be able to enact it in the same way as others. So if you have an IT team that supports an entire company, you can't just say, sorry, we're not going to help you with your password on a Friday. We need to figure out unique and creative ways to do that so that we're enacting the overall big picture thoughts and research, while also saying it has to practically apply for entrepreneurs and businesses.
So what's the constructive conversation for employees to have and leaders to have about this?
Yeah, so I wrote a whole article in Harvard Business Review about how to ask your employer for the 4-day work week. And I'll kind of walk through those general points right now. So first, you want to see if your supervisor is even up to the task of trying to have that conversation. You may be working for an industrialist, but really just their biggest key performance indicator is butts in the chair for 40 hours a week. So assuming that you have a supervisor and an employee group that want to work together, to then have a small group of 3 to 6 people that have the same job role to say, what are the key performance indicators we already are enacting? What are some boundaries we can set for our team? So are we going to email after 5? Are we going to take Friday completely off? What sort of boundaries do we need to have around our team and our time outside of here? Because it only takes Jim from accounting once to send an email at 9 at night on a Wednesday to get the whole team to go back into the old mindset.
Well,
so then what you're...
Just quickly, yeah. No, just quickly to wrap up, you've got about 20 seconds.
Okay, yeah, so then you're just going to weekly be looking at those key performance indicators, what's working, what's not working, and then do a 360 review of how that experiment went, and then decide if you're going to do a second experiment.
Well, certainly something to think about. Joe Sanek, thank you so much. Author of Thursday is the New Friday. Crossing the Bloomberg Terminal, IAC's Dotdash to acquire Meredith Corp's National Media Group. You might remember it was just late September that there was talks about that. We had reported on it, according to a person familiar. So that deal indeed is getting done. IAC to fund the deal with cash on hand and newly incurred debt. So again, this was floated around late September, but again, getting done.
Meredith shares higher by 6% on the deal to sell its National Media Group. The portfolio will combine people, better homes and gardens, all recipes, Southern living in style, and more.
All right, good to know that. All right, coming up, it's been a very busy day out of the nation's capital. Joe Matthew, host of Sound On, coming up. Guessing you're going to talk about debt ceiling and a few other things?
Yeah, we might. There could be a deal. Nobody knows what's going on right now, which is the best way to start a live program. We're going to find out together. Mitch McConnell says he's offering to help us get through the month of November. We're waiting to hear from Chuck Schumer now. This could be the break, guys. That's why the markets took a little sigh of relief today.
Yeah, we had 2 different trading days today. Joe Matthew, looking forward to it. Love when the news is unfolding, just as you're kicking off. Sound On with Joe Matthew coming up. For Tim Stanovic, Carol Masser, have a good evening.
Thursday's the New Friday.
Yeah, yay.
the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Zuckerberg responds, the Facebook CEO, saying simply, it is not true that the social networks put profits over people, saying he doesn't recognize the company whistleblower Frances Haugen has described. But he agrees regulation is needed. What could and should that look like? We'll discuss. Plus, Amazon's video game streaming platform Twitch has been hacked, exposing source code and how